Welcome back to Finpod, your daily financial digest. I am Evan, and I'm glad you are here as we wrap up another wild day in the markets. Before we dive into the action, a quick shout out to our sponsor, Fintwit.ai, the go-to platform for real-time trading signals and stock recommendations. Let's get right into it. It has been a massive day for semiconductor and tech stocks. Adobe is seeing significant pressure, down about 6% in after-hours trading. The company reported second quarter results and announced the unexpected departure of its chief financial officer, which has clearly spooked investors. Intel, on the other hand, is up nearly 10% today. The big news here is a major analyst double upgrade from Bank of America, coupled with reports that Google may be tapping Intel for custom chip production, fueling the narrative that Intel's foundry business is finally gaining real traction. SanDisk is also surging, up over 14%. This follows news of a long-term capacity expansion plan from South Korea's SK Hynix, which has reignited the AI storage trade and boosted confidence in the memory sector's long-term demand. Finally, AMD gained 8% today. It is riding the wave of broader tech optimism and positive analyst sentiment as investors continue to bet on its AI accelerator growth story in the data center space. Looking at the broader market, it was a day of relief and recovery. The S&P 500, the Dow, and the Nasdaq all closed significantly higher, with the Nasdaq leading the charge, jumping over 2%. The primary driver was geopolitical news. President Trump announced the cancellation of planned strikes against Iran, signaling a de-escalation that immediately eased market anxiety. This, combined with falling oil prices and a retreat in Treasury yields, provided the perfect backdrop for a broad-based rally. It was a massive turnaround after a rough start to the week, showing just how quickly sentiment can shift when the macro narrative changes. In the AI economy, the focus remains on the massive infrastructure build-out. While hardware giants like NVDA and the memory players we mentioned are seeing renewed demand, we are also seeing some friction. Oracle fell today despite an earnings beat, as investors digested its capital expenditure plans and guidance. The industry is grappling with the sheer cost of the AI revolution, with reports today highlighting how AI adoption is even pushing up costs in sectors like healthcare. The consensus remains that while the AI story is structural, the market is becoming much more selective about which companies can actually translate that spending into profitable growth. Beyond the names we have already discussed, I am keeping a close eye on a few other movers. Lennar is up over 5% today after reporting its second quarter results. Despite the challenging housing environment, the home builder showed resilience, and the market seems to be reacting positively to their latest operational updates. RH, the luxury home brand, is also in focus after hours following their first quarter earnings report, which showed a slight revenue dip, but included a raised outlook that has the stock moving up about 7%. Wrapping up our earnings watch, Adobe's results were a major focal point, and the market's negative reaction to the CFO's exit and the guidance update suggests investors are still very cautious about software valuations in the current climate. Lennar's earnings, meanwhile, seem to have provided some comfort to those worried about the impact of interest rates on the housing sector. That is it for today's market wrap. We saw a broad recovery fueled by geopolitical de-escalation and a massive jump in the semiconductor space. If you enjoyed this episode, please like, share, and subscribe to the channel. Drop a comment below if there is a specific stock or sector you want me to cover tomorrow. And remember, for expert stock recommendations, visit fintwit.ai. Thanks for listening, and I will see you back here tomorrow.